Good afternoon and welcome to the Boring Millionaire podcast. Today is Wednesday, August 6th, and in this episode, I'm going to discuss what the stock market has been doing over the past week, where I think it's going to be going over the next week, and some of the news surrounding the market that's kind of been dictating the price action that we've seen. So last Thursday, we hit an all-time high on the S&P 500, and if you're new to the market, the S&P 500 is Dude, I don't know why I can't get past that, so I'm going to just skip it. Good afternoon and welcome to the Boring Millionaire podcast. Today is Wednesday, August 6th, and in this episode, I'm going to discuss what we've seen in the stock market over the past week, where I think we're heading, and some of the news surrounding the stock market. So last Thursday, we did see a fresh all-time high on the S&P 500, and if you're new to the market, the S&P 500 is basically the benchmark showing the performance of the stock market as a whole. What it really is, it's a grouping of the 500 best performing stocks on the public market, and that grouping is what's used to make that benchmark measurement. So, being that it's a measurement of the stock market overall, we did hit a fresh all-time high, meaning we hit the highest that it's ever been. So the highest that it's ever been was 64.27, and through the week we've had a lot of different price movements. Following that Thursday all-time high, we did see a 2% decline on Friday's trading. And I do just want to say, when we see down days like that, I would take advantage of them and use those days to invest in the stock market. So then after the fall we saw on Friday, we did see a rebound rally on Monday. We were up about 1.5%. Tuesday, yesterday's trading, we were down about 0.5%. And today we're rallying up about 0.75%. So I don't mean to just throw all these numbers at you, but the price movement is telling me that this is a very short-lived discount. And as I said in last week's market broadcast, 6,200 is the lowest I believe the S&P 500 is going to go. The reasons I believe that's the lowest it's going to go is because on one of the prior down days that we've seen 2 weeks ago, 6,200 was the lowest that we've seen. It was where the all-time high was for the beginning of July. And even going a distance further than 6,200, if we go below that, we'll see 6,150, being that was the previous all-time high on the S&P 500 for about 4 months. So on these down days, I would be a buyer of the stock market. There are plenty of opportunities in particular stocks, but if you don't know which ones to buy, one thing I would do is buy the UPRO S&P 500 88 ETF. Now, what that means is you're investing in the stock market as a whole. It's not just a few particular stocks. You're investing in the general stock market, which is always a good idea. And if the market as a whole is presenting a discount in the price, just like any other store you would be shopping at, if something you want to be buying is discounted to a lower price, it only helps your pocket. So on days like that, I would be a buyer. I would especially be a buyer of the UPRO 88 ETF. And as I'm saying double weight, what that means is if the stock market goes up 2%, this asset will appreciate and go up 4%. So you're getting the same action that you're looking to invest in, but you're getting double the bang for your buck. So I'm a big believer in that. And one thing I always like to say is market ETFs are the foundation underneath a house, and particular stocks are the house. So I love market ETFs. I love the UPRO, and I would be buying it if we see the S&P 500 down on any particular day. And the reason I think it's been down over these past few days is because earnings season is over. All of the major earnings are basically past. We still have NVIDIA on the horizon, but really all the trillion-dollar companies have reported already. All of even the B-tier, 500 billion companies we'll call them, most of them have reported as well. So some of what we have still left to report even this week is Airbnb, Lyft, Caterpillar, LegalZoom, and Disney. So those are the last few earnings reports I'm looking forward to see kind of what direction this market is going to be going in. But to look at the week prior, on Thursday, we did have both Amazon and Apple. Both stocks reported their earnings and then performed poorly after those earnings came out. At the worst of it, Amazon fell 8%, and at the worst of it, Apple fell about 4.5%. So being that these are multi-trillion-dollar companies, those price movements downward certainly affected the market, and we certainly saw that in Friday's trading. So where I'm going with all of this information is now that earnings season is over, I think a lot of people are going to take some money off the table. They're not going to totally liquidate and exit all of their positions in the stock market. But just for numbers' sake, if they have $100,000, they might sell $5,000 worth and say, all right, we've appreciated through this, rough patch we saw in April. We're breaking into fresh all-time highs. For about a month and a half, companies' earnings were dictating what direction the market would be going in, and that direction was higher and higher. So now that we're at a new era for the stock market, we don't know what direction we're going to go in. New things and new news are going to dictate where we go. So people are going to just basically secure some profits, take some money off the table, and that's where I think a lot of the negative price action came on Friday and Tuesday. But I do think it's going to be very short-lived. Even on Friday's 2% down, we were at 62.14 on the S&P at the lowest. So just reiterating, we are not falling through that 6,200 level. So plainly spoken, any discount I see in the stock market, I would be a buyer of. I think ultimately speaking, we're going to continue moving higher over a longer course of time. I think we're going to continue to see fresh all-time highs on the S&P as we move forward through August, September, and October. So as long as there's no major economic news that'll shift kind of the direction of the stock market, I do think we will continue moving higher. And I would even like to say in Friday's price movement and even Thursday, after hitting the all-time high, we kind of cooled off a little bit. Last Wednesday, we had a Federal Reserve meeting, and the Fed did come out and say they weren't cutting rates at that meeting. So again, not the reaction that the stock market was looking for, but also not necessarily the worst news we could have seen. Again, I want to reiterate a theory I have. In 2024, the Federal Reserve did say that they were going to cut twice through the year of 2025. Being that it's August and we haven't seen a single cut yet, I do think in September's meeting, more than likely, they're going to do one major cut. So instead of the two little ones like we were expecting, we're just going to get one major cut that basically covers all the distance they wanted to go and will set the rates at the position that they expected them to be, or want them to be, I should say. So, yeah, it was disappointing that the Fed did not cut like we all thought, but again, not the worst of it. So, all things said, I'm a buyer of all discounts. The market will continue moving higher, and so long as there's no negative news, we will continue seeing new all-time highs on the S&P 500. So, with all that said, please follow me on Facebook, Instagram, and Threads. All episodes are available on YouTube, Spotify, and Apple Podcasts, and I'm always available for any questions you might have about the market. My mission is to not only make you money with the stock market, but it's to make you feel confident while you're doing it. So thank you for tuning in, and I'll see you next week.